Hey, it's Chris Schneider with Trinity at MyWayHome.Biz, and I'm here with lending expert Tim Cranston with Inlanta Mortgage. This is our Home Buying 101 series. We're just trying to answer questions that you might have in the home buying process. One of the questions I get every once in a while, Tim, is I want to pay off my loan quicker, right? I obviously want to not have a mortgage if at all possible. Is it best to get a 15 or a 30-year mortgage? What do you think?
Well, it depends on how comfortable you are with the mortgage payment. Obviously, if you get a 30-year mortgage, it's going to be a little bit less per month. And if you're more comfortable with that, get that mortgage payment, 30 years, and then pay it off on a 15-year payment plan if you want to. You can still do that. Or if you pay, for example, one more payment per year on your schedule, you'll reduce your term to probably about 22 years. Okay. So there's a number of options.
Yeah, that's a good idea. I mean, if you're really confident in your ability to pay off the loan amount on a 15-year loan, fine, good, go ahead, right? But to be safe, sometimes it's better to go with 30 because that keeps your mortgage payments down a little bit. But there are still ways to pay that off quicker. I mean, add another payment every year or just add to it every month.
You can do that.
Right.
Yes.
Now, I've heard of penalties for, paying off your mortgage early. Is that something that's pretty common?
It used to be that we would see things called prepayment penalties. We're not seeing that anymore. Virtually on any mortgage that you'd get to buy a home, you can pay off principal at your decision.
Okay, so that's good. That still might be something you want to ask your lender, though, right?
It'd be good to maybe just check and be sure that's the case. But
right, when you're going through the process.
Yes.
Okay. Now, there's something else out there that's been pretty popular for a few years called refinancing your loan. What is refinancing and how does that work?
Well, if you have a mortgage today and you see an opportunity, if rates are lower that are being offered today versus what you're currently paying, or if you'd like to pull equity out of your home and use that for an investment or some other purpose, or possibly you have something called private mortgage insurance that you're paying every month. Refinancing or getting a new mortgage, paying off your current mortgage, may be the solution to some of those opportunities.
Okay, so it might be good for you in the end to at least ask the question.
Yes.
Can I get my payment down? Would it be better if I refinance this loan? Do you have to pay a whole nother down payment when you refinance a loan?
No, you don't have to pay a down payment. There are some closing costs, and you can actually finance those into your mortgage more often than not, and make that very easy to afford.
Okay, good. That's all good stuff to know. Yeah. Everybody has questions about this. Is it okay if they called you and talked to you or sent you an email? How would they go about doing that?
Yes, Chris, you can call me during or after business hours at 972-743-8999. Be happy to talk with you.
Okay. He's Tim. I'm Chris Schneider with Trinity, and you can find me at MyWayHome.Biz.